Hey, good afternoon, guys. Scott Durham with Ferrari Land Real Estate and FindAllRenoHomes.com. Hope you're doing well. Hey, I know a lot of you have had quite a few different questions about what's going on in the mortgage world right now, given everything that's going on with the economy and the coronavirus. So I decided to bring on my good friend and longtime business partner, Kevin Edwards, who works with Arbor Financial, to ask him a few questions and share with you exactly what is going on in the mortgage world. How's it going, Kevin?
It's going good, Scott. How you doing? Thanks for
I'm
having me.
doing great. I'm doing great. Thanks so much for being on this. Let's get right to it, okay?
Yeah.
So, one question that we've gotten asked many, many times, even on the real estate side, is when the Fed reduced the overnight funds rate to 0%, does that mean that mortgages are free? What sort of effect has that had on the actual interest rates in the mortgage market?
Yeah, that's a good question. That's a really common question. When the Fed goes and they do it on a Sunday, nonetheless, I can remember I was at my house and all of a sudden all these notifications, emails, the phone started ringing and the Fed had lowered the Fed funds rate to 0%. Well, what's that mean? It actually doesn't mean anything for mortgage rates. It's really more of an economic move for the Fed to help banks with their overnight trading, short-term trading when banks share money with other banks, okay, to keep the liquidity in the banking system going, help the banks share money and loan money to one another at a low cost. So that's really what was happening. Oftentimes, when you see the Fed actually lowering rates, typically, historically, mortgages go in the opposite direction because that would fuel like a stock market rally or something like that because of that assistance that the Fed's providing. Well, this was not this was as in response to the coronavirus, and then it didn't have a direct impact on mortgage rates. You know, we're not at zero on mortgage rates, but lots of folks thought we were.
No, no, unfortunately not. So, where are interest rates at right now? I mean, is this a good time from an interest rate perspective to be thinking about possibly purchasing or refinancing a home?
Yeah, so interest rates about a week or so before the Fed dropped their rate to zero, interest rates were just starting to knock on the door of all-time lows, and then they finally got to a position where they were trading mortgage-backed securities, and that market was trading at all-time lows. So rates were, really, really good, and
Hmm.
lots of individuals were calling in, or I was getting in touch to restructure their debt, refinance. Mortgage rates have come back off of those historic lows somewhat. They've stabilized, and that's a good thing. We really needed the market volatility to start to get stable. So, um, although we're not at historical low levels, we're still very low. And depending on your credit criteria and the different types of things that go into evaluating a credit, or excuse me, an interest rate. I'm not necessarily quoting rates right now, but I'll tell you we're in the mid to low threes on majority of our products that aren't
Excellent.
involving cash out or any other types of complexities. So
Excellent. Excellent. That's still a really attractive rate for someone looking to potentially either purchase or refinance. It's good to know. So, can you talk a little bit about the lending criteria for the lenders right now? And I know there was some talk of certain loan programs at least going away or temporarily getting suspended. Is that still going on right now?
yeah, things are changing every day. So every announcement that I get, I'm reading it. I'm really a student, keeping in mind how lenders are adjusting and how Fannie Mae and Freddie Mac are adjusting to minimize their risk, because that's really what banks and lenders and mortgage companies are trying to do: minimize the risk. They want to make sure that we're originating loans that we're confident in and that we feel like they're going to be good loans, not only over this 90-day window, but we're able to provide confidence in those loans over the next 5 to 6 years as well. And so, kind of back to your original point, is there's two types of loans. The first loan that got removed and frozen was what we call these non-QM loans, non-qualified mortgages. So it's for individuals that may be using alternative forms of income documentation, bank statement loans, um, other types of like cash flow loans, different ways to verify a borrower's ability to repay. Many lenders froze those programs completely. There's probably more than this, but I've got probably two or three lenders that I could call and see um, about options for those types of loans. But all in all, those loans are suspended. Okay, and this
So,
is a
but those
temporary.
loans make up a real minority of the overall picture. So the standard or typical person who's employed that uh, allows for them to provide tax returns to show their income on the documentation. I mean, those loans for most people are unaffected, correct?
Yeah, so now you're talking about like what we call just a conventional loan. It's a conforming loan. So when you hear those two words, those are standard loans that go through standard underwriting. Although there's now some different credit criteria that's put on those loan programs. Each scenario, here's how I'm handling it is when people call me, yeah, we can still lend. So yes, you can be clear about that. We are still lending. We are still putting loans together. I'm taking each of my buyers or clients on a case by case basis. I get all the information, and then I determine can we do something as is, or do we have to consider a different structure to meet the new underwriting criteria. The most important thing that's changed now is just more thorough employment verifications. We're verifying employment all the way up to the day that we're drawing loan docs, funding the loan. Okay, so there's your employer or whoever handles payroll. They're going to be contacted several times. So don't be alarmed, but it's what we have to do to make sure that you still have employment on the day we close.
Yeah, yeah. So a little bit more thorough, a little bit of changes in the process of the loan. But I guess the bottom line is for the vast majority of people out there, the overall picture of their ability to get a mortgage remains unchanged and it's still widely available for those that would have qualified before the coronavirus came into play in the last couple of months here.
Yeah, for me, it's a couple key credit scores that on a conventional loan, which is a Fannie Mae Freddie Mac, it's not a government loan like FHA, VA, or USDA, but on a conventional loan, there's still a nice appetite for investors to purchase those loans, and those will go down to a 620 credit score. On the government loans, although they've been FHA, VA, have been known for going lower than a 620, they're actually tightening the reins a little bit more. I'd really prefer anyone looking for FHA or VA right now to be a 640 or better on their credit score. We were quoting nice program options down to 620, but really most lenders from an interest rate criteria, they're really bumped that threshold up, and the loans are just more attractive at a 640 credit and better on the government loans right now.
Sure. Okay. Thanks for sharing that. So, switching gears just a little bit, obviously, this is a really difficult time financially for a lot of people, with people losing their jobs and seeing a reduction in their income. There's been some talk of some mortgage forbearance from certain lenders. Can you talk a little bit about if you talk to the person who's watching this video right now who's struggling, maybe they lost their job and needs a little bit of help on their mortgage, what kind of options are available to them?
Yeah, first of all, yeah, mortgage forbearance is available, and you need to call your loan servicer. That's the person who you make your payment to every month, so that number will be on the statement. These loan servicers, they're set up and they have processes in place to handle those calls, to even filter those requests through their online system. And you know, if you're able to make your payment, please do. I think that's a little certainly something I want to be clear about. It's not a freebie for individuals that have not been impacted, or people that have just maybe been impacted a little bit, but they're still able to pay. You want to be careful about deferring any type of payment if you're able to make it. But if you have suffered from a hardship, then it's it's great to know that you can make a phone call and protect your credit. if you need to miss a payment or defer a payment. Now, how that would look, it's going to be different for many servicers, but I'm not going to guarantee what's available, but I think there could be three options for you that they may present. One is um, taking those deferred payments and put them on the back of your loan. Okay. You may see that that's, if you were to defer, if you were forbear for 3 months, that's 3 payments. Those are going to go on the back of your loan. The other option, they may say, okay, when you start making your payments, let's say July 1st, we're going to ask that you repay that balloon or that deferment over the next 12 to 36 months. Then they may work with you to determine what, how fast you'd like to make those payments up. So it's a lot like if your property taxes go up, right? And your mortgage payment may change some. So it's a temporary adjustment to take advantage or to account for any shortage. And then the third is, and again, I don't know if this is being offered and which services are offering it, but it's a little bit more extensive, is a modification for your loan. But these options are available, and it's important that you make those calls. You may have made your April payment, but things have changed now. But you know, there are options out there for you to consider. Do not make any commitment without understanding it. So contact Scott or myself, and we can make sure we get your questions answered.
Yes, please do. Of course, we're always happy to help. So kind of wrapping up, I mean, what advice do you have for someone who's been thinking about possibly purchasing or refinancing a home right now?
Yeah, my advice for people that want to refinance first is get all your stuff together, get an application taken, and be ready to go so that you're ready when an interest rate may hit that level that you're looking to take advantage of. So you want to be ready for that. Other individuals may still be just looking to restructure some personal debt and do a cash out refinance and just do some debt consolidation, trade some short-term debt and turn it into longer-term debt. So they may see a cash flow savings monthly of hundreds of dollars. So that could be good advice. The other thing too is in regards to refi, people want to know, are the rates going to go lower? Are they going to go lower? And you know, it's really hard to make a judgment on, are you going to get that like unicorn rate, that perfect interest rate? It's hard to time it, but you just have to know what your objective is and use me. I can provide some good analytics for you to see what it looks like over the short term and the long term for you, and if it's going to be beneficial. With home buyers, again, you know, when I talk to home buyers, it really comes down to, do you like the house and can you afford the payment? You know, I'm still kind of meat and potatoes on that in regards to forecasting the housing market and what that looks like. Scott's done a great job of sharing that type of information. We really do know that, you know, every seller has different motives. It could create opportunities for buyers. And if a buyer has to make a $1,800 a month rent or $18 to $2,000 a month on a house, you're gonna have to make a payment either way. So
Either
it really
way,
comes
yeah.
down to opportunities. So
Excellent, excellent, Kevin. Thanks so much for your knowledge and information, and we appreciate you as always. And thanks for your time today.
thanks, Scott.
Have a great day.